Good evening, everyone, and really thanks a lot for joining on this call. This is Abhishek Mehrotra, Head of Investment Products with HDFC Securities. I just recollect what
Okay, great. And the presentation slides are changing, right? So
Prasad, we have gone live. Just a sec. I'll give you an introduction.
Okay.
Yeah. So to all the people who have joined, I just recollect what Nirmala Sitharaman has said in the previous budget, not this one, which was talking about Jai Jawan, Jai Kisan, Jai Vigyan, and Jai Anusandhan. You know, Anusandhan is primarily research, and research brings a lot of innovation. And that is the topic of the day because we are very happy to share that our mutual fund partner, SBI Mutual Fund, one of the largest fund house in the country, has come up with a fund called SBI Innovation Opportunities Fund, Innovative Opportunities Fund, sorry. And so normally people associate innovation primarily to technology, and that's why we have requested Mr. Prasad to come over the call and discuss and share what it is in it for us. A quick introduction of Mr. Prasad. Mr. Prasad Padala, he is with SBI AMC since last 7 years, and he is handling the fund manager responsibility, and he has a total work ex of more than 15 years. He is a BTech IIT Madras pass out and an MBA from IIM Ahmedabad. Like me, he is also a CFA charter holder, and our objective is that all the investors who have joined this webinar on YouTube or otherwise, we want to inform you what this fund all about it, and then you can have an informed decision. We'll be happy to take your questions after this call. So it will be a quick call of say around 25-30 minutes. It's over to you, Prasad, and please share us what is innovative and what are innovators all about in your fund.
Yeah, thank you so much, Abhishek, for the kind introduction. Yeah, hi everyone. Thank you for taking out your time. Welcome to the call. So let me quickly give you a bit of a background in terms of the concept of the fund, what are our thoughts about the innovation. Then we'll talk about the fund construction, and then we can take Q&A. So when we look at when we think about innovation, right? So innovation is something that is happening everywhere, in every sector, in every geography. And there are some companies who are innovating and then taking away market share from the companies who are not innovating. So, for example, if you look at companies like Tesla or Netflix, so these companies came up with innovative business models and then created a lot of value for their shareholders and also for the consumers. And because of that, they've actually created a lot of value. And even if you look at the kind of stock returns they have generated over the last decade, so the returns are phenomenal. So we are seeing a similar trends in India, where we believe that a lot of business models are emerging, a lot of innovation is happening, and these companies will eventually create a lot of wealth for everybody. So even if you look at the US markets and saw how the index composition itself has changed, where 10 years back, the index was mostly consisted of banks, autos, and manufacturing and oil. But now almost 30% of the index is made up of these innovative companies who are born just before 20 years, not even 20 years before. So we believe that even in India, we see that similar trends will play out, where after 10 years, if you look at the index, you will see a lot of these innovative companies in the index. And we want to play this theme ahead, and we want to take investors along with us with this fund. So if you look at the next slide, so let me know if the slide doesn't change. So if you look at this slide, so every event that is mentioned here, it itself is a breakthrough innovation, whether it is a printing press or a television or a radio. So each event has actually changed our lives tremendously, and also a lot of companies have actually created a lot of wealth by playing these things. And if you look at another interesting aspect, is that the pace of innovation is accelerating quite a bit. So there was almost 100 years between the invention of printing press to television. But within the last 50 years, we have seen a lot of inventions happening. For example, telephones, then personal computers, laptops, smartphones. Now we are talking about artificial intelligence, drones, AR, VR. So there's a lot of innovation happening quite fast, and we believe that there would be a lot of companies who can benefit from these trends. And this is another example that we have seen in our lifespan, how the storage of data itself has changed from floppy disks before 80s to now instantly storing terabytes of data in cloud. It has actually changed quite a bit. Or if you look at our consumption of audio with videos, even that there has been a tremendous change. Like most of you would be remembering the Walkmans and the MP3 players. Now we have on smartphones where we can stream thousands of songs very seamlessly. And if you look at this slide, so with innovation, even the pace of disruption is accelerating. So this slide actually talks about how long companies in the S&P 500 in the US stayed in the top 10. So before 2000, so companies used to stay in top 10 for almost like 85 years. But now with the pace of innovation increasing, that average life has actually came down quite a bit. And now if you talk about companies like Nvidia, so they were not even there in the top 10 until 5 years back. And now it is the third most valued company in the world. And for a brief moment, it was the most valued company in the world. So that is how fast the leadership is changing, how fast businesses are getting disrupted, and also how fast the value is getting generated. So if you play these trends quite early, there is a lot of wealth that can be generated. So even in some of our other portfolios, we invested in Microsoft quite early because we saw that cloud as a trend is emerging. Or you talk about Alphabet, which was benefited from the entire advertising technology trend. Or Nvidia, for example, which benefited from the entire artificial intelligence thing. So if you can identify these things early, then there is a lot of wealth that you can generate. So this is another key slide. So if you look at innovation as a trend, so it is not just one sector specific. It's not just a IT or a technology specific trend. You are seeing innovation happening across sectors, whether it is automobiles or financial services, energy, or you take healthcare, industrials, media. So everywhere there is innovation happening, and in every sector there are some players who are innovating and then generating value, and some players who are in denial mode and then losing out. So for example, if you sometime back, if you look at what happened to Nokia, or if you look at what happened to Kodak, so these are companies which fail to innovate. These are companies which fail to see in the trends changing, and they've got wiped out. So so this theme actually will create a lot of winners and losers. So as equity investors, so we want to stick to the winners who are innovating and creating wealth, rather than sticking to the losing companies. So if you look at this slide, so some of the so India, so when you talk about India, so we believe that India is at that stage which is ready to take off. So we have all the favorable factors in place, the right ingredients, whether you talk about favorable demographics, or you talk about the current talent pool, or you look at the government initiatives. So like Abhishek has mentioned about the Ansandhan Fund and all that. So there's a lot of push from the government, which is actually making the innovation pace accelerating. So because of all these factors, we believe that India will take off in the next few years, and then next decade is going to be very different. And then, so we believe that we can actually make use of these trends to the fullest. Now coming to the fund. So quickly, when we look at innovators, right? So broadly, we categorize them into three buckets. So one are product or service innovators. So these are the companies who launch innovative products or services. So this can be an internet company launching an internet platform which is enabling users to transact online, like an e-commerce platform like a Flipkart, or it can be Just Dial, or it can be IndiaMart, or it can be Nykaa. So these kind of platforms, or it can be a traditional company like a pharma company launching innovative products through their own R&D, or it can be some company in industrials which can be launching a differentiated product which is much different and differentiated from the competitors. So it can be any of these segments. It can be either new age company, or it can be a old economy company which is actually innovating and creating value. The second bucket is process innovators. So these are the companies, they need not have very innovative product or a service, but just by innovating on the process side, so they are able to generate value. So for example, if you look at some of the delivery companies, so they are using a lot of technology to operate to optimize their processes, and they are also using a lot of different algorithms to make their delivery more efficient compared to the competitors. So these companies are able to create a niche and then gain market share from the other players. Or if I have to give another example, so sometime back, Domino's Pizza started this 30-minute delivery, which is like a very simple concept, but that actually helped them gain market share from their competitors. It also created a lot of value for consumers and created a trust factor also, which gave them an edge. So it can be as simple innovation as that, but the impact can be much higher. Finally, we have innovation adapters. So these are companies which may not be the first to start a trend. So for example, electric vehicle as a trend, for example. So let's say Tata Motors or a Hero Motors they are not, or a TVS, they are not the first ones to launch EV products. Somebody in the US, somebody like a Tesla, somebody has started the trend. But if you saw the trend happening, and then if you start ahead of others, and then you start launch those models and then gain market share. So those are the example of innovation adapters. So how do we identify these innovative companies? So these are some of the qualitative and quantitative factors we have listed here. So we look at parameters like whether they are investing enough on R&D, whether they are using the latest technologies like AI, automation, etc., to bring down their overall cost. Also, we look at whether they are launching new products or services. We'll also look at whether they're investing in these new technologies, new emerging areas. So finally, we look at whether the company is creating some kind of an edge for themselves, some kind of a competitive advantage by using these innovations. That is how we identify the companies. So coming to the portfolio construction, so it will be a multi-sector portfolio because we see innovation happening across sectors, not in just technology. So it will be a good mix of so across sectors, and it will be a market cap agnostic portfolio. We'll focus on all large cap, mid cap, and small cap, regardless of the market cap. And we want to invest at least 80% of the assets would be dedicated to this theme. So we want to stick to the theme, be true to the label, and then invest into these innovative companies as much as possible. It could be even higher, up to 90-95%, because we strongly believe in this theme. So if you look, even if you look at the US markets and see which stocks did well in the last 10 years, so most of these stocks actually fall into this bucket. So we believe that even in India, in next decade, will give a lot of opportunities to play this trend. And so we want to be true to the label, not only because we believe in this theme, but also it is as a SBI MF, we believe in creating thematics which are true to the label. And second, we want to we have kept a leeway to invest up to 35% of assets outside India. So these are global stocks. So if you look at some of our other portfolios, already have some of the global stocks. So over the years, we have generated that capability to identify stocks outside India. Even I have actually personally stayed in the US for the last 2 years and did a lot of ground level work, met a lot of these companies, attended a lot of conferences, and hoping to bring that back, bring those learnings back. And also, we have a partner in the name of Amundi, which has a global research. So we can utilize that research as well to supplement our own research. So right now, there is an RBI limit in terms of upper cap, in terms of how much we can invest outside. But we are expecting those limits to open up soon. And if that happens, so we can go as high as up to 35% of the overall portfolio to invest into these foreign stocks. Because if you look at some of these emerging themes like artificial intelligence or hydrogen, etc., so most of the beneficiaries are listed outside India. So we want to use these limits to really play these companies to our advantage. And in terms of the portfolio construction, it will be a purely bottom-up kind of a portfolio with at least 35 to 40 stocks. And we would be focusing on companies with resilient business models and strong competitive advantages. And then we'll be focusing on growth, high growth companies with growth potential and a longevity of growth. And we would be looking for companies or business models which have a potential to generate strong cash flows in the future. So some of these new age companies might be loss making in the initial phases of the journey, but we look closely and look at whether they're making profits at a unit level, whether they can make profits when the business scales. So if that is not the case, then we will not be touching those companies. I mean, we won't buy just for growth, but we look for pathway to profitability, whether the company can start generating profits in the next 3 years, and in the steady state, how much profits they can make. So that would be the benchmark. And finally, we'll be looking for reasonable valuations. So it's not a buy at any price kind of a strategy. So we'll be very careful, because some of these new age companies can trade at a very exorbitant kind of valuations. So we'll only look for those companies where there is enough growth prospects to justify the current valuations. So we'll only invest there. We would not be chasing any companies with any valuation. And also, because there would be inherently more volatility in this space, we'll use those that volatility to our advantage, and we'll look for better entry points whenever we get those chances. So broadly, that is about the overall portfolio construction approach. And in terms of the suitability of the product, so it is a portfolio that is targeting higher growth, higher returns, but it also comes with inherently a higher volatility, because most of these new age business models are slightly more volatile. So it would be suitable for those investors who understand the theme, understand that they're getting into these emerging themes, and are more focused on long-term capital appreciation, and have a time horizon of at least 3 to 5 years, and are okay with short-term volatility. So so it would be suitable for those kind of investors. Yeah, so broadly that is it about the fund, and we can take up any questions.
Thanks, Prasad. That was crisp and very clear. The key takeaways for me as an investor will be, it's a fairly diversified fund. I was initially, or the thought was it will be a pure tech oriented, but that's not the case, as you told me and told all the investors, that yes, it will be a fairly diversified fund across sectors. There are opportunities to participate in innovation. Second thing which I really liked and I'll highlight to our investors is the fund has the ability to participate into global opportunity up to 35%. Obviously, only and when they feel like, it's not a compulsion, but yes, they have a flexibility to do that. Prasad, also just share us how this fund will be different from the other funds which are already part of the group and they are doing phenomenally well. So if you can throw some light on that, because our investors would like to know. There are some clients who have already invested in other funds of SBI. So how this fund will be different?
Sure, definitely. One, it would be a very bottom-up kind of a portfolio construction. So we'll be having, so it would be like very agnostic to index weights. Suppose, let's say if there is 35, I think banking would be what, I think more than 35% of the portfolio. But if we don't find a lot of innovation happening in the major banks, so we can completely stay away from that space. So that way, we'll have a very active kind of a portfolio where the focus will be completely bottom up. And second, so if you look at the portfolio construction, it will look very different, because we are actually excluding many of the heavyweights. So we'll be only focusing on areas where there is innovation happening. So some sectors will have more allocation. For example, technology is one space, technology internet is one space, and you will also have a lot of consumer names, pharma. You will also have some auto and industrials. So these sectors will contribute more compared to more commoditized sectors, cements, metals, etc. So that is the second point. And third, we want to also, I mean, whenever the limits open up, I think the foreign, there is a lot of scope to invest into many of these foreign innovators in this name. So whenever the limits open, the percentage of allocation to foreign stocks will be higher in this fund compared to any other fund.
Got it. Got it. So there are some questions from the investors I'll quickly take up. So primarily clients want to.
Before that, I just want to add one more bit. I think you summarized it very well. Only point I want to add is it is also there will be a good mix between new age companies and traditional companies. So because when you think of innovation, what comes to mind is companies. But it would be a good mix of even the traditional companies. We are seeing a lot of innovation. For example, let's say somebody like a Tata Motors or TVS, if they're launching electric vehicles, so they also will be part of the portfolio.
Got it. Got it. So also there are some investors who want to know what is the source of getting research of these companies, because at times majority of the research is on the large cap and the mid cap side. So that's one. And secondly, how you will be benchmarking this portfolio with.
Sure. So research will be completely dependent on our internal research. So at SBI Mutual Fund, we have one of the largest research teams in the street, and also we'll get service from the entire sell side, where there is coverage across not just large caps, but there is many brokerage houses which have coverage on mid cap and small cap. So we'll be utilizing their research also. And also we have a global partner in the name of Abhishek, so they have a global research. So we'll be utilizing their research as well. So that is the first part. Sorry, what was the second question?
What is the benchmark for this fund?
Yeah, sorry. Okay. Yeah. So the benchmark would be NSE 500.
Okay. Okay. Also, just can you throw some light on how this fund will flare up? Looking at you informed about volatility. That's good. But investors will want to know what will be the rate of returns or what they should expect, knowing that nominal rate of returns from the market is around double digit so far. So views on that, yeah.
Sure. Yeah. So ideally, in this fund, the returns should be higher because if you look at the new age companies, their earnings itself, they're compounding at more than 15%. Even if you look at the revenue growth, in some cases they're going even faster, like 20%, 25%. And also we are also taking slightly higher risk also. So the return expectations should be definitely higher, like at least 15%, if not 20-25%. And also, like I said, in terms of managing the risk, so we'll be looking at not just the new age companies, but also traditional companies which are also innovating. So that way we'll try to manage the risk. So I think even in a risk-adjusted basis, our aim is to do better than the market.
Does the fund also allows you to participate into unlisted or startup space?
Yeah, unlisted we cannot, but we can do pre-IPO. So that means companies which are about to get listed. Suppose like 1 year before, so the IPO has to happen within 1 year of our investment. So we can participate after the DRHP is filed, before the IPO actually happens.
Okay, that's interesting. And also, can you show some light in terms of a broader mix of the portfolio in terms of large, mid, and small cap? Currently, how you think? Obviously, this will be fairly very flexible, and yeah.
So so if you look at our benchmark is NSE 500, so it would be, I think 60-70% would be large cap, if I'm not wrong.
Okay.
So this fund ideally, but this fund ideally in a steady state should have slightly more mid cap compared to the index, because if you look at the universe, so most of the new age companies are smaller in size, like they're not large cap. Some of them are in mid cap, some of them are in small cap. So I would say in a steady state, when the portfolio would be slightly more tilted towards mid cap, but again also depends upon our overall market view, what we think about overall large caps, mid cap space, etc. So currently, I mean, we believe that mid cap and small cap have actually slightly inflated valuations. So if I have to construct, I mean, to start with, we'll have a slightly more allocation towards large cap, and slowly we'll move towards the ideal portfolio construction, which is the more mid cap. Yeah, to answer your question, yeah, we'll start with slightly more large cap because our market view is more in favor of large caps right now. But slowly over the period of, let's say, 6 months to 1 year, we'll move more towards mid cap.
Got it. Got it. So no, we have, in fact, just to quote an example, I know you cannot talk about stocks. Like all our investors who are there, they know that how one of the new age company, which is called Zomato, they had they came into profits, and then the price soared from 60 or 50 rupees, and now it is trading at 210 to 20. So obviously, yes, these type of companies do definitely create an alpha when there is a quick shift. But in such kind of a scenario, Prasad, at a construct level, how will you like to play with the portfolio? How long will you stay in that company, or what all parameters apart from, say, valuation parameters which you'll use to enter or to exit?
Yeah, sure. Yeah, so basically we'll look for businesses which do well and then gain market share from others. So the entry will depend upon various factors. So one, we look for growth potential and how much the market is building and how much we think that they can do. And second, we also look at valuations, whether we can actually justify those valuations. So if the valuations are too high, maybe we'll wait for a better entry point. Because I mean, if you look at this space, right, it's very volatile. So you can actually use the volatility to your advantage. Because there are, I mean, there will be a constant news flow on Zomato, for example, about new competitors entering, or let's say ONDC or something or the other keeps happening. So there would be a periods of troughs where we can use that as an advantage to enter. And the sell decision again, it is again slightly more tricky because there are ample examples out there where you sell too early. For example, we invested in Nvidia like before 200 when the price was around 180, 190, and when the stock went to 500, we thought we already made enough money. It was like very expensive, and then we sold out, and then stock went to like 1300. So so that way it is difficult to find the top. I mean, most probably if the stock is doing, company is doing well, then I mean, it will continue to do well. So typically, unless the valuations are very, very, very expensive, like exorbitantly expensive, where it doesn't make sense, then we'll exit. Otherwise, as long as the company keeps doing well and we don't find better investment opportunities, we stay put. So two reasons to sell: one, if the stock becomes very, very expensive, or if you find another mouth-watering opportunity where you desperately need money and you have to sell somewhere, and then so we'll be selling this company. Because some of the trends, if you look at, let's say, e-commerce or some of these trends, so they can be decadal trends. Like, for example, cloud, for example. I think it has been going on for more than a decade now, and then it can go on for another decade. So these are very long-term trends. So companies which are doing well can continue to do well for a very long time. So there's no hurry to sell, but yeah, those two reasons is when we sell.
Okay, well, I'll tell our investors, if they don't know about Amundi, Amundi is one of the largest asset management company in Europe, and globally it's one of the 10th largest. That's the data as in 2021 probably. So it's a very strong player for SBI, and that's how they will have the inputs from the global research also. There are some questions which I'll quickly take up, the minimum investment amount and all. So any client who wish to participate can, the minimum investment amount as all the funds is 5,000 rupees, and the NFO has just started, and it is available on all the websites of HDFC Securities, all portals, which is HDFC InvestRight app and HDFC Sky, and also on Invest Now. All the clients who are looking forward to participate, please understand this will be a volatile fund, obviously the risk category is pretty high, so one should look forward for investing for long term, and looking forward for long-term appreciation. As Prasad said, it will be volatile. So obviously, with volatility comes periods of good and bad returns. So one should be very cautious when investing. Once the fund is open, you all the investors can also do a additional SIP on this. So you can stagger your investment, half of it right now, half of it in as a SIP. All is basis your risk appetite and how you want to take it up. And I'll thank you, Prasad, for coming up and in a quick short of time, and then explaining the fund to all our investors. We hope that this fund does very well, and all the best to you.
Yeah, thank you very much, Abhishek, and thank you everyone for joining the call.
Thanks all the investors for joining this call. Really appreciate. Thank you.